Today, we are diving deep into what might just be one of the most powerful signals flashing in the market right now. We're talking about a living legend of investing, a guy who just placed an enormous bet on a crypto company that almost everyone else has completely written off.
You know, on Wall Street, you got your big names, and then you have legends. Bill Miller, he's a legend. And we're going to look at his recent 3% stake in a crypto miner. We'll call it BitMine Immersion, or BMNR for short. The billion-dollar question really is, what on earth does he see that the rest of us are missing?
All right, let's get into it. Here's our roadmap. First, we'll look at the man and the bet itself. Then, we're going to decode his unique playbook. After that, we'll solve the puzzle of this company's wild valuation. Check out its balance sheet, which is an absolute fortress. And finally, we'll talk about the endgame and what this all really means. Now, to really grasp how big of a deal this is, you have to understand who we're talking about. See, Bill Miller isn't some gambler throwing darts at a board. He is a stone-cold, calculating investor who sees massive opportunity where pretty much everyone else just sees career-ending risk. And that's the key, right? To really, truly understand this bet, you have to understand the man who's making it. We've got to get inside his head, break down his philosophy, because it defies what almost everyone else does in the market.
So how does a guy like this become a legend in the first place? Well, it all comes down to what we're calling his contrarian playbook. And honestly, it's just beautiful in its simplicity.
15. That's the number. This is what cemented his legend. For 15 straight years, from 1991 all the way to 2005, Bill Miller's fund beat the S&P 500. Look, that's not just good. A lot of academics would tell you that's statistically impossible. But he did it. So how'd he pull it off? It's this simple philosophy right here. His entire career is built on one thing. Find something with real, tangible value, and then just wait. He waits for everyone else to absolutely panic so he can swoop in and buy it at a massive discount. He doesn't run from the fire, he runs directly into it.
And his track record speaks for itself. I mean, think about it. After the dot-com bubble exploded, he bought Amazon when people were calling it a worthless shell of a company. It ended up being a 100-bagger for him. Then in 2014, he bought Bitcoin when everyone was laughing, calling it magic internet money. That move made him a billionaire. This is his signature, which, of course, brings us to today and his bet on BMNR.
Okay, this is where we really get to the heart of the mystery. Because when you start looking at BMNR's numbers through Bill Miller's eyes, you don't see risk at all. You see this unbelievable opportunity practically screaming at you from the page.
The very first number that just screams trouble is its price-to-earnings ratio. It's under 3. Now, let's be super clear here. In the investing world, a PE ratio this low is a giant, flashing, neon red sign that says danger. It means the market is terrified of something. Maybe it's crypto volatility, maybe it's future regulations, who knows? But the consensus is clear. This company's best days are long gone.
To put it bluntly, a PE this low means one thing and one thing only. The market fully believes the company's earnings are about to just disappear forever. It is quite literally pricing it for death.
But this is where Bill Miller plays a totally different game. It's his secret weapon. He loves to take that PE ratio and just flip it on its head. He looks at something called the earnings yield. So instead of asking, how expensive is this stock? He asks, for every single dollar I put in, how much in earnings is this company actually generating for me? And boom, it completely changes the entire perspective.
And when you do that with BMNR, the number you get back is staggering. A 38% earnings yield. Let me say that again, 38%. What that means is, for every dollar you invest, the company is generating 38 cents in earnings. In the world of investing, that is what they call a fat pitch, an absolute home run opportunity.
But hang on a second. A 38% yield doesn't mean anything if the company is about to go bankrupt, right? That PE of 3 must be pointing to some fatal flaw. So to find it, we have to look past the income statement and dig into the company's balance sheet. And folks, this is where the story gets really incredible.
So when Miller popped the hood and took a look, he didn't find a company on the brink of collapse. Oh no, he found a financial fortress. We're talking over $1 billion in cold hard cash, $12 billion in liquid Ethereum, and the absolute kicker? Zero, zilch, nada, no debt. The implications of this are just staggering. With that much cash and absolutely no debt, the company is basically bulletproof when it comes to bankruptcy. In fact, if you just look at its tangible book value, which is basically what the company would be worth if it sold off its cash and crypto tomorrow, it comes out to about $35 a share. At that price, an investor is getting the entire crypto mining operation for free. For free! That is the massive margin of safety that Bill Miller lives for.
And this is exactly why some folks are calling this the MicroStrategy 2.0 thesis, but honestly, it's even better. MicroStrategy holds Bitcoin, which is great, but it doesn't earn you a yield, and they're loaded with debt to do it. BMNR, on the other hand, holds Ethereum, which you can stake to get a yield, and it has zero debt. For a value investor, that is the holy grail.
So you're probably thinking, if the numbers are this incredible, why isn't every single hedge fund on the planet piling into this thing? That is the perfect question, and it brings us to the endgame. Because Miller's investment isn't just about him buying a stock. It's a signal, a massive signal to the entire market.
You can think of it like the Miller effect. He's like a giant icebreaker ship clearing a path. First, the legend buys in. That breaks the ice, proves the water's safe. Second, he provides what they call air cover. Now, another fund manager can go to their investment committee and say, hey, Bill Miller's in, which gives them permission to buy too. And that, of course, leads to step 3, the potential for a massive tidal wave of copycat buying.
So what does this all really mean for the market? Well, first, it could signal a huge shift in how we see crypto assets, moving them from just a pure growth speculation into a legitimate value investment based on cold, hard cash flow. Second, by taking a 3% stake off the table, Miller creates a supply shock, making the shares that are left even more scarce. And finally, and this might be the most important part, his presence acts as a psychological anchor. The next time a crypto panic hits, investors can look over and say, well, Bill Miller is still in, and that could prevent a total meltdown in confidence.
So let's put it all together. Bill Miller did not buy a lottery ticket. Based on his entire playbook in this analysis, he bought what he sees as a money printing machine. And he got it at a price that he believes the market has gotten fundamentally, totally, and completely wrong.
He's betting that this mistake is temporary, and that the window to get in on it is closing fast. The market has priced this company for death. The legend has placed his bet on its survival and its success. The only question left is, who's right?